Hi folks, time to take a look at Chapter 5. Notice Chapter 5, all about cash disbursement schemes. By the way, wherever there's cash, there's people trying to get it. So we're going to take a look at it, a few different parts. First part has to do with billing, right? There's billing schemes. Sometimes people tamper with the checks. Also payroll, commissions, things like this. Again, these are other areas where people can try to take advantage. Also expense reimbursements, fake invoices, things like that. And then stuff at the cash register, voided transactions, all of these types of things. This would be more like in a retail environment. All right, so let's start taking a look. All right, so billing schemes, basically, when you start out talking about them, it's some sort of false document, getting somebody to issue a payment, okay? And, just a fake invoice. And usually when folks do this, notice, usually there's one of the three ways. There's a shell company, there's a vendor that they could work with, or personal purchases. So generally three big different ways to accomplish this. Okay, so the first one, and usually one that's somebody doing a big amount, shell company. Okay, so a shell company scheme, this is when you're creating a fake company for the sole purpose of committing fraud. So again, notice here, sometimes nothing more than a fabricated name and a post office box. A lot of companies are so big, if they don't have good internal controls, they wind up for paying things that never actually happened. Okay, I'm going to expand this out a little bit so you can see it. And again, you don't worry about memorizing this, but this is just so somebody employee forms a shell company. They have to come up with some sort of address, right? Now, which one of these will they use? Well, it depends on just depends. Employee's residence is not a good idea. Post office box, something else. You got to get a bank account so you can get these checks sent in there. And then typically, fictitious name, right? Some kind of business. Sometimes they're going to need some sort of official document they're going to need to incorporate. So as you go through here, you could submit an invoice, purchase items needed. Anyway, so as you go through here, you could take a look. Forge your authorized signature. Is the preparator authorized to approve purchases? Okay, so a lot of times if the person is allowed to approve purchases and there's not a lot of oversight, this is where somebody could take advantage of this. By the way, it happens in city government quite a bit. Also, in other large companies, right? Anyway, the bottom line is at the end, they're going to collect the check, and you can go through, here you go, slip invoice into stack of approved invoices, create a false voucher. A lot of these things, again, like they said before, you have to think like a fraudster, right? Well, if you went through here, you would say, hey, that's what I would do if I was a fraudster. Okay? So here they're kind of going through the process a little bit. Certificate of incorporation, open a bank account, get an identity, get an address. Okay, so again, once the company is formed, the bank has been opened, corrupt employee is positioned to begin billing his employer, right? And all of a sudden, the money's just flying out the window. Here is where they're mentioning that self-approval. Okay, by the way, again, this is obviously somebody's pretty high up in the company in order to do this. Fraudster was here going, many shell company examples. The fraudster was in a position to approve payment of the very invoices he fraudulently submitted. Okay, so there you go. Again, separation of duties, double checking. I'm sure you guys have probably seen, you ever seen on a check, usually on a check, like if you're buying a house or from a law firm where it'll require two signatures, this is one of the ways to make sure things like this are stopped. Well, prevent it as much as we can. Okay. A little bit more about how this happens. Notice they say rubber stamp supervisors. They're not paying attention. You just put the paper down in front of them and they sign it. False documents always. Collusion. Again, if you get a few people, if you get a group together working to do this type of thing, it's going to be super hard to catch them, because what happens is they can get around the internal controls by knowing, by having the right people in place. Okay. All right. Then purchase of services rather than goods, because goods you can actually touch. Services, once they happen, they're gone. Okay. And then sometimes what happens is pass-through, where all they're looking to do is get it to resell the merchandise to his employer. So basically, they're going to buy stuff through the employer, then turn around and form a company to resell it back to the people they stole it from. Pretty ingenious stuff. You got to think like a fraudster. Okay. So how do you kind of prevent these things? So they're talking about that a little bit. There's a number of different ways, and there's no way for you to memorize all of these, right? But if you were in practice, you'd probably have like a list of things you're going through. Okay. Notice here, they're among the most costly of all forms of occupational fraud, because what happens is it takes a while to catch them. Okay. So the first thing, maintain and regularly update an approved vendors list. This is number one, because if they're not in an approved vendors list, that normally means they have to get a second authorization. And notice what it says about their invoices. They tend to lack detailed description of the items. Mail drop or residential mailing address. This, if you see a P.O. box, or if you see what looks like a regular home address. Consecutively numbered invoices by the company. Again, if somebody's doing business with a lot of different companies or invoicing a lot of different companies, they would not be in consecutive order. Notice, billed for same or similar amounts. A lot of times the approval process, say for instance, you could have a $1,000 threshold, right? And at $1,000, it requires a secondary approval. Well, if you were busy trying to rip off that company, what would you do? Well, you'd make sure that those bills were always under $1,000, right? So how can you test it? What are some of the ways? And there are a lot, okay? You can go through and sort the payments by vendor, amount, invoice, right? So in other words, what you're doing there, you're looking to analyze to make sure it makes sense. Doing a horizontal analysis. Anytime your budget seems out of whack, that could be a reason. Expense trends, are they, you're looking at a year-over-year trend. Purchase levels, if all of a sudden you're purchasing more stuff than you would normally be using. Doing an inventory match, okay. Here they got average unit price. That could be what types of goods are purchased. Are all of a sudden goods being purchased that seem odd for your business? Vendor addresses to employee addresses. Now I have to tell you, if you were doing this and you use you're an employee and you use your home address, well, you're just looking for trouble there. And then the turnaround time on these on the vendor invoices. Again, another thing you could do, right? You want to, is this actually a shell company or not? Now, there's a few things you can do, right? Number one, look up the vendor in the phone book or internet. I don't know about the phone book anymore. I don't even think anybody does that, right? Check with others in the same business if they're familiar with the vendor. If you're getting great deals from a vendor and nobody else knows about this vendor, that's kind of a little warning bell. And then, if they have an address, go to the address, see what actually exists, okay? A lot of times people just use fake addresses, they make them up, and that's how they get away with these kind of crimes, okay? Now, how do you figure out which employee is doing this? Because typically this is an employee or an employee working with a vendor, okay? Search who started the company, right? Because somebody had to start the company. Now, they might have done that with a false name, okay? I don't know about this one here. Payroll checks deposited by the suspected employee. Match checks converted. I don't know about that. If there was a mail drop, you could actually surveil it. You'd probably have to hire an investigator to do that. The suspect's office. Okay, again, if they're your employee, you have the right to do that. So these are just some ways you could try to do it. Now here, what happens if you have non-accomplice vendors? Okay, so here you're talking about paying return, like purposely double paying an invoice, paying the wrong vendor intentionally, overpaying the vendor. Okay, so anyway, here there's a lot that you could do. Like again, who's authorizing and doing this? Okay, so how they manage to create, in this case, a non-accomplice vendor. What they're doing is they're actually trying to get the additional money out another way. And again, here's the pay and return schemes. Okay, so again, invoice received from a non-accomplice vendor. So the employee intentionally mishandles the payment. They issue the check to the wrong person. whatever the case may be. So again, but the bottom line here is you're diverting that money that's supposed to go to an actual vendor to someplace else. So in the books, it looks like it's paid, but then eventually this comes to the screeching halt when somebody says, hey, we haven't gotten paid. All right, folks, that's part one. We'll be back with part two in just a moment.